Hello guys, welcome to the Stock Horde channel, and right in this video I will tell you how exactly you will become rich with long-term investing. One of the great things about investing is that it takes only one great purchase, held for a long time, to change your family's future. Great fortunes arise from decades of holding stocks in firms that generate earnings that are always growing. Some refer to this approach as business-like investing. The basic strategy for getting rich from stocks is to choose a profitable company and then hold your investments for the long term. This type of passive investing has the potential to make you very rich indeed. Getting rich means long-term investing. Buy and hold investing is an easy way for most people to gather wealth from stocks. The secret is the power of compounding. You'll see the benefits when you receive returns on your total profit from capital gains and dividends. Over time, your investment will compound, but the real perk of a buy and hold plan is that it can withstand some missteps. A well-constructed portfolio can stand up to large doses of failure while still bringing in nice returns. The power of a good investment. Imagine that it's March 13, 1986, the date that a company known as Microsoft had its initial public offering. IPO. Many cars retailed for about $10,000 in that year. But what if you had purchased shares in Microsoft instead of buying a car? That investment would be worth over $25.8 million by 2021. The power of a single good investment is that it's able to survive a lot of disasters and mistakes. Let's go back to 1986 again. Assume that you had put the $10,000 into 10 different stocks at $1,000 each, just one of which was Microsoft. Now suppose that you somehow managed to construct the worst portfolio ever. 9 of your 10 holdings went bankrupt the day after you acquire them. How would you have fared? You invested $10,000 and lost $9,000 right away. 90% of your investment is gone, but you still did great overall. You'd still be sitting on $2.58 million in 2021, thanks to those shares of Microsoft that you bought in 1986. And that doesn't even include your cash dividends. Avoiding wipeout risk is key. Things historically work out nicely when you can hang on and survive recessions, depressions, and liquidity crunches. Holding is key. Many people wouldn't have held their Microsoft stock for those 3 decades. They would have bailed out after doubling or tripling their money. They would have missed out on the great gains they could have made if they had stuck it out. Behavioral finance is the study of investor behavior. It shows that people tend to make very human mistakes, and they repeat them. They don't always act rationally. Point 2, it can be hard to ignore short-term fluctuations in price. This is why index funds are so useful. The fall or rise of a company isn't apparent when you're looking at the index as a whole, and that can help you avoid acting on emotion or fear. The time value of money. You multiplied your money by large proportions in this scenario. You did it without lifting a finger or ever glancing at your portfolio again, just as if you had owned an index fund. You did nothing for decades except let the time value of money work for you. How to choose for buy and hold investing. Boring stocks, the kind you might never give a second glance, are often the best. Best buys hidden in plain sight. You still watched your $10,000 blossom despite losing half your portfolio at the outset, even though half your portfolio compounded and the other half went bust. 3 characteristics of a great long-term holding. Good investments tend to combine 3 characteristics: strength, valuation, and stewardship. These stable, well-managed companies will help you get rich slowly, which is the most reliable method of building wealth. Look for companies with leadership that seem to be invested in their shareholders' best interests. You want to invest only in those that will respect your money. The tricks of the trade. All investments come with a certain amount of risk, but a few tricks of the trade can help you reduce exposure and maximize profit. Keys to building a portfolio of good stocks include sticking to stocks you know, diversifying, reinvesting your dividends, knowing when to sell a stock, choosing funds that promote passivity. Also, get access to my step-by-step investing guide for free. Just check the link to access at the description area below. Make sure to subscribe, like, and share guys. I will see you all right in the next video. Cheers.